Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with inflation data, wholesale inflation data, breaking news for the month of June. PPI comes in unchanged. We're expecting up 0.2. Unchanged would be the smallest inflationary wholesale increase in it since it was minus 1/10 in March of this year. Strip out food and energy, it remains zero. Unchanged, zero. And that would that would comp towards April when we were minus 0.2, which, by the way, was lowest inflation rate going all the way back to April of 2020. If we strip out food, energy, and trade, unchanged. That also would comp towards April of this year. Now, let's take a bigger view, year over year. Year over year headline, expected 2.5, comes in 0.2 light. 2.3%. That would be the lightest in the Wayback Machine going to September of last year. If we strip out food and energy, up 2.6, a tenth light, and that is 0.4 less than the rear view mirror, which was up 3%. That 2.6, well, we have to go back to July of last year, 1 year, and that was 2.6. Find a lower number, you're in April of 24. And finally, the year-over-year, ex-food, ex-energy, ex-trade, 2.5%, 0.2 lighter than 2.7. 2.5, Wayback Machine, you're equally where we were in November of 23. To find a lower number, you're in February of 21. Now, that is all very good news. These numbers are less than expectations. They're sequentially less. However, if you look at revisions, that changes things. The revisions are coming through on a month-over-month data. So last month, we had up 0.1 on month-over-month, all three metrics. The headline, ex-food and energy, and trade. Those have all moved higher. Up 0.3 on headline, 0.4 on core, and 0.1 ex-food, energy, and trade. So we could debate that there was a hump there, but no matter how you slice it, these numbers are better than expected. Although the wholesale side isn't getting the same horsepower these types of numbers would have got on the consumer side. Yesterday, interest rates are moving around a bit to the downside, but hovering very close to where they were. We're at 447 and a 10. We're now at 446. 446 is down a couple of basis points. The pre-opening equities like the number as they make new Dow future highs. I want to point out something. There's a lot of talk, of course, about how interest rates have been moving higher, and indeed they have. Yesterday's close in the 2-year was roughly a 1-month high yield close, and the 10-year, 1.5-month high yield close, and the 30-year bond this morning they hovered at a level that would have been a 2-month high yield close. But remember, we had the NASDAQ close at an all-time high yesterday. The S&P's only a few days behind. And the Dow, well, you have to go back to December to see the highest close, but we're not that far away. To me, this is old school. Equities going up, interest rates going up. That's kind of the way textbook economics taught us, isn't it? Becky, back to you.